So welcome students to this class for direct tax paper, and in this particular lecture we would be covering the non-resident taxation series from this lecture onwards, and particularly what I would be touching upon in this particular series is the non-resident taxation part, the residential status part, the DTAA aspects, the double taxation avoidance agreement, AAR. So all of that I would be covering up with you. So let's begin with it with the non-resident taxation first. Now, first of all, what I'll be covering under non-resident taxation is the residential status, the income accruing or arising in India and deemed to accrue or arising in India concept, certain provisions under the Income Tax Act which are specifically applicable for the non-residents. We would be looking into it. We would be solving a lot of problems based on that, and the withholding tax part, the TDS part with respect to the non-resident, all of that we are going to cover in the non-resident taxation part, and then it will be followed by double tax avoidance agreement and followed by advanced ruling procedures. So quickly beginning up with the class. First, today I am going to touch upon the residential status. Now, first of all, let's understand one thing. Why residential status is very important? Because understand one thing, what section 4, the charging section, says that where any central act enacts that income tax shall be charged for any assessment year at any rate, income tax or those rate at that rate or those rates shall be charged for that year in accordance with and subject to the provisions of this act in respect of the total income of previous year of every person. Right? So this is our charging section to the Income Tax Act, which says that on the total income of a person, of every person, the income tax shall be charged in the AY. Now, understand one thing, the income tax rates and the total income is decided based upon the category of the resident or not, based on the category of a person, whether he's a resident or whether he's a non-resident, right? So that is the reason why our charging section becomes very important to our charging section throws light on the total income, and because of which the residency provision becomes very important to understand when a person's total income would be taxable in India and when it will not be taxable in India, right? So I'll take you to section 4 part first. One second. Yeah. So what this section 4 says is income tax shall be charged. Section 4 says income tax shall be charged at the rate or at any rate on the total income of any person, right? So total income of the previous year of any or every person, right? So now what do you mean by the term total income? The total income term, this term total income, is defined under section 245. Total income comes from or is defined under section 245 of the Act. And what does it say? What does section 245 says? It says that total income means total amount of income referred to in section 5 computed in the manner laid down under this act, right? So section 4 refers to total income, and section 245 refers to section 5. What does 245 says? That total income means total amount of income referred to in section 5. Now section 5 determines the scope of total income. Scope of total income means what? That for resident, these all income would be taxable in India. For a resident and not ordinary resident, only these incomes will be taxable in India. And for non-resident, what will be taxable in India? So that is defined under the scope of total income under section 5. So for that, first we need to go to section 6 to determine the residency of a person, right? And for your attempt, let me tell you, section 6 becomes very, very, very important. Mark my words, because there has been a substantial change in section 6, and therefore it assumes a lot of importance, and we will spend a considerable time on section 6. Clear? So let's start with it. What does section 6 says? Now section 6 talks about a residency of individual, HUF, firm or AOP and a company. Right now I'm just touching upon individual. We will separately deal with HUF, firm, and we will elaborately deal with company also. So first I'm touching upon the individual residential aspect. Now for individual, how is the residential status determined? For individual, the residential status is determined based on the number of days of stay in India. Clear? Now, we have two conditions for residential status in India. The condition number 1 is the basic condition. What is the basic condition? Number 1, stay in India for 182 days or more. This is the first condition. Clear? The second basic condition is, it's an or condition, right? Stay in India for greater than equal to 60 days during the previous year, and stay for greater than equal to 365 days in last 4 previous year, and stay in India for greater than equal to 365 days in 4 previous year. So during the current year, you have to stay for more than 60 days, and during the last 4 years, you should be present in India for more than 365 days. So these are the two basic conditions for determining the residency of an individual in India. Clear up till now? Now, if any of these conditions you fulfill, you will become a resident in India. Now, to this condition, there are certain exceptions which are created. And what are those exceptions? Let's understand. The first exception is exception number 1 is this 60-day condition which is existing. This 60-day condition which is existing, this will be replaced by, so replace 60 days with 182 days, right? For whom? For Indian citizen leaving India as a member of crew of an Indianship or for the purpose of employment outside India. Right? So, Indian citizen leaving India as a member of crew of an Indian ship or for the purpose of employment outside India, for him, we will consider 60 days as 182 days. Meaning thereby, this condition would not at all exist for that person, the second condition, because any which ways the 182-day condition is there under first part. So if you cross any which ways 182 days, then there is no requirement to look at the past 365-day period in 4 years, right? So this 60-day would be considered as 182-day. In other words, only first condition would be applicable if an Indian citizen leaves India as a member of crew of an Indian ship or for the purpose of employment outside India. So say for example, I am a resident of India. I get a job, say in ENY, and I'm in say London, and I'm going for the purpose of employment outside India, then I will be resident only if I have stayed in India for more than 182 days. So 60-day condition would not be applicable in that very case. Are you clear? Then second exception under this exception 1 is Indian citizen or a person of Indian origin engaged in employment outside India comes on visit to India. Comes on visit to India. So if say for example, I have been always outside India, I am engaged in an employment outside India, and I'm coming for a visit to India, I can be in India only for the period of 182 days. Okay. In that case, 60-day condition will not be counted. So a citizen of India or person of Indian origin who being outside India comes on a visit to India. So if say for example, I'm always resident outside India and I'm coming for a visit to India, I can come for 182 days. Is it clear? Now, what is person of Indian origin? Where is it defined? So, section 6 says you have to refer to the definition of person of Indian origin under section 115C. And it says a person shall be deemed to be of Indian origin. Who is person of Indian origin as per 115C? PIO as per section 115C is if person whose either parents or any of his grandparents were born in undivided India. Clear? So, person of Indian origin if its parent or any of his grandparents were born in undivided India. Right? Now, this was up till now. This was existing till now. Now, what has been the amendment? We look into it now. Now, there has been an amendment. There are two amendments, in fact, to the residential status. This is the first amendment, and the second amendment is a new exception has been created, which I call it as exception 2. What is that? It says replace 60 days with 120 days. So this is the amendment for your attempt, and it's very, very, very important. Now, for whom we have to replace the 60-day period with 120 days period. So what does this amendment says? Let's read it together. So see, Indian citizen or a person of Indian origin. Indian citizen or a person of Indian origin. I told you the definition of person of Indian origin, right? Indian citizen or a person of Indian origin whose or having total income other than the income from foreign sources. We will learn about what is the income from foreign sources exceeding 15 lakh rupees. Exceeding 15 lakh rupees, right? So if an Indian citizen or a person of Indian origin having total income from Indian sources other than foreign sources means from Indian sources, I'll define what is Indian sources and foreign sources, exceeding rupees 15 lakh. So for them, you have to replace the 60-day condition with 120-day condition, meaning thereby a person, Indian citizen or a person of Indian origin having total income greater than rupees 15 lakhs would be considered as resident of India if he is present in India for more than 120 days and for 365 days in the last 4 previous year. So for second exception, you have to replace the 60 days with 120 days, and you will also have the 365 days condition. Clear? So that is the second exception, right? Then I'll tell you about income from foreign sources, but let me deal with the exception number 3 too. Now, a person who is not a resident as per section 6.1. This, whatever we have talked about, is section 6.1. Now, there is a new clause introduced, section 6.1a, which says that notwithstanding anything contained in section 6.1, individual being citizen of India. Here we do not have a PIO. Here we only have citizen of India. Having total income other than income from foreign sources exceeding 15 lakhs. Now, this person shall be considered as deemed resident. He shall be considered as deemed resident if he is not liable to tax in any country by reason of his residence. Now understand one thing. Now there are 3 exceptions which are created. Now we'll break down this thing and understand what is the implication and why these amendments have been introduced. First exception, replace 60 days with 182 days for Indian citizen leaving India for the purpose of employment or as a member of crew of Indian ship. For him, only 182-day condition. Or Indian citizen or PIO outside India comes on visit to India. For him also, it is 182-day condition. We have a second exception, replacing 60 days with 120 days criteria for a person, Indian citizen or PIO having total income other than foreign sources exceeding rupees 15 lakh. In that case, you have to replace 60 days with 120 days. Now, why this amendment was introduced? This amendment was introduced as some of the Indian citizens were trying to manipulate the Indian income by managing their stay, were trying to manipulate their residency by managing their number of days of stay. So though they were conducting their businesses from India, though they were managing their businesses from India, but they were managing their stay in such a way that they were becoming non-resident and their income was not being taxable in India. So because of that, they have reduced this threshold of 182 to 120 days. Clear? And third exception is called deemed residency. Deemed residency. Now, what does this provision say? That if an individual who is citizen of India, who is not liable to tax in any country, he should not be liable to tax in any country by reason of his residence, and if his total income exceeds 15 lakh, then irrespective of the number of days of stay, he will be considered as deemed resident in India. So for section 6(1)(a), we need not even see the number of days of stay condition. For deemed residency, if you are not liable to tax in any country, and even if you have not come to India for one day, then in that case, you would be considered as deemed resident of India. Now, a person who has already become resident under section 6(1) will not be falling under deemed residency. It's only for the person who are non-resident who are not falling under 6(1). Is it clear? Now, I'll break down for you what is, first of all, total income other than income from foreign sources. Total income other than income from foreign sources. Now, section 6 specifically provides what do we mean by income from foreign sources. So, income from foreign sources means income which accrues or arises outside India except income derived from business controlled in or profession set up in India. And second, which is not deemed to accrue or arise in India. So, what is income from foreign sources which will not be considered under total income? Income which accrues or arises outside India except income which is derived from a business controlled in or profession set up in India and which is not deemed to accrue or arise in India. So what do I mean by that? If I have to simplify this, the total income, you will not consider income from foreign sources. And what is that? So you will not consider income deemed to accrue or arise outside India, right? Or income which is not deemed to accrue or arise in India. Income not deemed to accrue or arise in India. Number one, income accruing or arising outside India, but you will consider income from, so you will consider income from business controlled in or profession set up in India. Income derived from business control or profession set up in India. Are you clear? We will deal with their examples, like what all are the income which are considered to be received in India and which are not to be considered to be received in India. Are you clear with this perspective now? So what kind of income will be considered for total income purpose and what will not be considered for total income purpose? Let's see. So income which are included, income includable for total income and income which are to be excluded for total income. Clear? So what you will include is dividend or interest received in India or accruing in India on Indian shares or loan received in India or accruing in India. Right? That is one. What you will not include is dividend or interest on securities outside India, received outside India, or for that matter, accrued outside India. Right? Next, what else you will include is income from business controlled in India, income from business controlled in India, set up in India. You will not include income from business having no nexus with India. Are you clear? Third, capital gains on property situated in India. You will include this, right? What you will not include is capital gains on property situated outside India. Clear? Or capital gain on sale of shares of Indian company. Right? What you will not include is sale of share of foreign company. Right? Whether you will include the rental income? Yes. So rental income from property in India, you will include. Rental income outside India, you will exclude. On property located outside India. Clear? So this is how you would determine what incomes will be included and what incomes will be excluded from the total income. And if your total income exceeds 15 lakh, then in that case, you have to check the income exceeds 15 lakh for exception 2 as well as exception 3, right? Now, what is the difference between exception 2 and exception 3? For exception 2, we have the Indian citizen or person of Indian origin who are coming on visit to India and their total income exceeds 15 lakh. For them, we have to take 120 days into account. For person who is not liable to tax in any country, for them, we have exception 3. Now, why do we have a deemed residency provision? Why we have created a deemed residency provision? Understand that thing now. There were some citizens of India who were trying to avoid the taxes in any jurisdiction. So there are some countries, especially in Europe, where it is easily, there is an option available to buy the citizenship of that country without paying any taxes. So you get the passport, you become citizen of those country, and it is quite possible that you are not particularly resident of that country, and therefore you are not taxable in that country. You do have a citizenship, or sometimes it happens that that kind of person is resident of neither of the countries in the world. So he's a stateless person. Such persons are called as stateless person. They are not resident of any country. They are not liable to tax in any country in the world because of their residency. So in that case, to capture such citizens' income, because they are citizen of India, but they are not liable to tax in any country because they are not resident in any of the country. In that particular case, what we have to do is we have to take into account such person's total income year and determine if it exceeds 15 lakh. If that is the case, then in that particular situation, he will be considered as deemed resident even if he never visited India. Even if he never visited India. So that is the reason why this deemed residency provision has been introduced under our Income Tax Act very recently by Finance Act 2020. So what you need to see is, if say for example, I am preparing a chart for you or a table. So this will help you understand. So if my number of days of stay is say less than 120 days, right? And my income is greater than 15 lakh. My income is greater than 15 lakh, but I have stayed in India for less than 120 days. Then in that case, I will be a non-resident. Why? Because even though my income exceeds 15 lakh, but I will be falling under that second exception, which says my stay should have been more than 120 days. Is it the case? The answer is no. So in that particular case, I will be considered as non-resident, right? For income less than 15 lakh, you have the condition of 182 days. For income more than 15 lakh, you have the condition of 120 days, right? And if your income is less than 15 lakh, then you have 182 day condition, right? Then you are falling under exception 1. Clear? And in that case, if your stay is less than 182 days, you would be considered as non-resident. And if your income is greater than 15 lakh, and even if you have not visited for even one day, plus you are not liable to tax anywhere, then in that particular situation, you will be considered as a resident. Are you clear? So when you have to apply this second exception, when your income is greater than 50 lakh, you have to apply 120 days condition. If your income is less than 15 lakh, you have to apply 182 day condition. And if you're not liable to tax in any country, and if your income is more than 15 lakh, then even if you have not stayed for any day in India, you would be considered as deemed resident in India. So this is particularly for person of Indian origin or citizen. This is only for citizen who is outside India and he who comes on visit to India, coming to India. So this is specifically for those persons. Clear? For persons who are going outside India for employment, for them it is clearly 182-day condition. Clear? For persons going outside India for employment, it is 182-day condition. So person going outside for employment or crew of Indian ship member, it is always 182-day condition, right? And there is no total income limit. Clear? For Indian citizen or PIO coming to India, having total income less than 15 lakh, it is again 182-day condition, right? Total income less than 15 lakh. For Indian citizen or PIO coming to India, having total income greater than 15 lakh, it is 120-day condition, right? For Indian citizen not liable to tax anywhere, there is no condition for number of days of stay, but greater than 15 lakh condition. Are you clear with this? Any doubts till now? Or we will dwell into it much more detail. I'm giving you 2 minutes to ask the doubts. Any doubts till now? So Srinivas is asking, ma'am, 365 and 4 previous year means including previous year or other than? No, other than previous year. In the current year, 60 days, and in the last 4 years, 365 days. Gomathi, I think I've cleared that 60 days is only replaced with 120, but for 120, you also need to look into the 365-day condition too. Any other doubt? You can ask me the doubt relating to this. Okay, so we shall proceed further if there are no further doubts. So now understand one thing. Because this particular provision has been introduced, right? Understand this thing, that what is the implication of this provision? What is the implication of this provision? Understood that this is something which has changed. These two are not existing earlier. What is the implication of this particular amendment? So until now or up till now, these two categories were considered as non-resident, right? Now they would be considered as resident. Now remember one thing, under residency also there is two kind of resident, or there are two kinds of resident: resident and ordinary resident, and resident and not ordinary resident. Correct? Now, what is a resident and ordinary resident, and who is a resident and not ordinary resident? Let's look into it. So, a person, if you see, is considered as resident and ordinary resident if he two basic conditions. If he fulfill two basic conditions. If either of the condition is not fulfilled, he would be considered as resident and not ordinary resident. Now, what are the two additional conditions? Not sorry, two additional conditions. Now, what are these two additional conditions? One is resident in India for greater than equal to resident in India for greater than equal to 2 out of 10 previous year. So you should have been resident in India for 2 out of 10 previous year. At least 2 out of 10 previous year you should have been resident in India. And this is an and condition. Second condition is what? For greater than equal to 730 days in 7 previous years. So 730 days in 7 previous year. So even if you fail to fulfill one of the additional condition, you will become a resident and not ordinary resident. Clear? So you have to determine first the two basic conditions, and then you have to determine two additional conditions to determine whether a person is a resident and ordinary resident or a resident and not ordinary resident. But for these two kind of categories, these categories are generally considered as resident and not ordinary resident. So what is a condition for them? Let's see. So this kind of category, which I call it as exception 2, this I call it as exception 2, and this I call it as exception 3. Now this exception 2 will be considered as resident and not ordinary resident if his stay in India is for more than 120 days but less than 182 days. In that case, he would be considered as resident and not ordinary resident. So if his stay in India is greater than 120 days but less than 182 days, he would be considered as resident and not ordinary resident. Clear? Then option 3, Indian citizen not liable to tax, a person who is deemed resident will always be considered as resident and not ordinary resident. Clear? So who will be considered as resident and ordinary resident, and one who is ordinary resident? So ROR is one who fulfills two additional conditions, right, of being resident for 2 out of 10 previous year and for greater than 730 days resident for, or present for 730 days in 7 previous year. And who is resident and not ordinary resident? One who fulfills either or none of additional condition. Second, stateless person. Third, person of Indian origin or Indian citizen having total income other than foreign sources greater than 15 lakh and his presence is for greater than equal to 120 days but less than 182 days. Are you clear? So only a who is following the exception to a stateless person and a person who fulfills either or none of the additional conditions be considered as ROR, RNOR. And if you fulfill both the condition, you will be considered ROR. So for exception 2 and exception 3, we need not test these additional conditions. So for exception 2 and exception 3, you need not test additional condition. Whereas for the rest of the cases, you have to test the additional condition. Very clear? So we had written here 4 cases, right? So for this, you will have to check additional. A person going outside India for employment or a crew of Indian ship. You have to also check for Indian citizen or PIO coming to India if his total income is right. But for this last 2 category, Indian citizen or PIO coming into India or Indian citizen not liable to tax, for these you will be RNOR automatically. For this you will be RNOR for great equal 120 but less than 182 days. Clear? And this is automatic. This distinction has been made between ROR and RNOR. I'll deal in a meantime. But have you understood completely? You give me an answer in the chat boxes, or if you have in doubt, you can ask me with respect to this. Pooja, you are asking Indian citizen not liable to tax anywhere under 15 lakhs, not taxable anywhere. I didn't get your query exactly. So do you mean that Indian citizen not liable to tax anywhere and having total income less than 15 lakhs, would it be considered as deemed resident? Is this, and if he is not considered as deemed resident, so he would not be considered as deemed resident if he is having less than 15 lakh from Indian income. And in that very case, the normal conditions will apply for visit in India. And if he is not visiting in India, he would not be considered as deemed resident because his income is less than 15 lakh. And in that case, even if he is not liable to tax anywhere, it's okay because 15 lakh is kept as a bar. Because above 15 lakh, it is generally considered by the government that a substantial income has been earned by that person and he needs to be taxed in India. But below 15 lakh, if that is the case, then in that case, he would not be considered as resident. So please explain total income other than foreign sources. Yes, Raghuram, I'll explain again. If the amount is exactly 15 lakhs, that will not be covered because the section uses the word exceeding rupees 50 lakhs. Rohita, I told you that deemed residency would always mean resident and not ordinary resident. Muthu, 730 days of presence in India in the last 7 previous years. Dhanush, no. In section 61A, the only condition is for Indian citizen. As I said, it is not for person of Indian origin. Tekum, you're asking if a person goes outside India for employment and the total income other than foreign sources is more than 15 lakhs. So, if it's more than 15 lakhs, then you fall under exception 2. You have the 120 days criteria in that very case. Because if you have gone for employment forever, it's your if it's your first time that you're going out for employment, you would India. But if you're going forever and you're just coming on visit to India, then you have 120-day criteria. Yes, for first two categories, Preeti, you're asking 60 days we need to check. Which first two categories you're asking? So first two categories is like, see, I told you one who is going outside for employment or as a crew of Indian ship, for him, it's a 182-day condition. The second category, when you're coming on visit to India and you have less than 15 lakh income. Again, you have to check only 182-day condition. You have to replace 60 days with 182 days. So there is no 60-day condition for any category. Exception 3 is always regarded as RON, RNO. Yes. So Pooja, you are asking, but will he not be taxable at all? So Pooja, understand one thing, he would be taxable in India on the Indian source income. Because for a non-resident also, I'll come into that, for a non-resident also, India always taxes his income which is sourced in India. But what will be the implication if he is NR and I'll give you an answer in the meantime, because I'll tell you what are the implications of these amendments, and that point in time you will clearly understand that why this distinction has been made. Any other doubt? Ria, you are correct. How total income can be determined that is exceeding 15 lakh without knowing the residential status? So see, Ria, the foreign sourced income, I have to exclude it. The Indian sourced income, I have to include it. I told you the examples which I have to exclude it and the examples which we can include it. But beyond that, there are certain cases where certain exemptions or certain deductions are only available to a non-resident or to a resident. So, if we need to determine what will be the total income, we first need to know what is the residential status. And for determining residential status, we need to know what is the total income. So, you understand there is a circular kind of ring created by the act itself. So the act is not very clear and there are two views to it. One of the view to it is that even if you don't know the residential status, you should include that income for the time being. And if you resident, reduce income. The second is you know residential status include such kind of income which is specifically taxable for resident or where the deduction is specifically available for non-resident, so you should not apply that. So it is not very clear. The act itself is very ambiguous. I'll explain again exception 3. Ria, I hope it's cleared. I'll explain again the entire residential status part. Neil, I have given this in the PDF file which I have shared. Chandana, you're asking if an Indian citizen satisfy 120 days and 365 days condition, then what is the status of individual? The status of individual would be resident. And why we need to check additional condition? Because to classify him as ROR or RNOR. The only additional condition in that case you would satisfy is 120 days but less than 182 days. You don't need to go to additional condition at all. What you only need to check is for such kind of 120-day person is that whether he's present for less than 182 days. Only then he could be RNOR. If he is present for more than 182 days, then he is not RNOR. Because then he has to satisfy additional conditions too. Anything else? So should I proceed further? I'll explain it again for those of you who wanted me to explain once again. So understand one thing. We have now 3 category of person. I'll give you the flow chart also of that, how to determine the residency. But let's first understand briefly how is it. So first thing, you need to check the basic condition. What are the 2 basic conditions which we need to check is 182 days or 60 days, and in the last 4 years 365 days. Clear? Now there are certain exception to the 60-day condition. Exception 1 is with regard to a person going outside India for employment. A person going outside India for employment or a member of crew of Indian ship, for him only 182-day condition. Clear? Second, person who has always been outside India comes visit to India, right? So what is the difference between category 1 and category 2? In category 1, say for example, I am today sitting in India, I'm doing job in India. Tomorrow I get transfer or I get a job in London. I will have 182-day condition. And category 2, say for example, I have left India permanently on employment in 2010, right? In 2010, I have left India for employment outside India in London. I have never come to India. I just come for intermittently visiting India. So I will fall under category 2. In the category 1, a person who is outgoing person will be considered. In category 2, a person who is incoming person will be considered, whose total income is less than 15 lakh. For him, replace 60 days with 182 days. So only 182-day condition will be considered. Third category, person who has always been outside India, citizen or person of Indian origin, and he has total income other than income from foreign sources. In that very case, what will happen is you will replace 60 days with 120 days condition. So 120 days, and in the last 4 years 365 days. Clear? Then you would be considered as resident. And fourth category of persons is a person who is not liable to tax in any country by reason of his residency. And if he has total income other than income from foreign sources greater than rupees 15 lakh, he would be considered as resident in India irrespective of number of days of stay. Clear? Now the first category of person, if he is resident, person who is satisfying either 182 day or 60 days criteria, for him to be resident, what will be the Additional criteria will be based on resident in 2 out of 10 previous years, or and the second additional condition is presence in India for 729 days or more in last 7 years, or 730 days or more in last 7 years. Clear? That is the additional condition. If I am going outside for employment, then I have only 182-day condition, and also have to fulfill additional condition for ROR, which is again same. 2 out of 10 years I should have been resident, and 730 days or more in 7 previous years. Clear? Then second category is, if I am coming on visit to India and if my total income is less than 15 lakh, again I have 2 additional conditions for ROR. If I am in the category 3, where I am coming from outside India on visit for more than 120 days and my total income is more than 15 lakh, I will be RNOR if my residential stay, if my presence in India is more than 120 but less than 182 days. I don't need to check the additional conditions for category 3. For category 4, I will be always RNOR. Is it clear? Now, what is total income other than income from foreign sources? So you have to exclude income accruing outside India, income not deemed to accrue or arise in India. So income which is deemed to accrue or arise in India under section 9, you have to include in total income. Which is not deemed to accrue, which is accruing or arising outside India, you have to exclude it. Clear? You have to include income from business controlled or professional setup in India. Is it clear? Is it clear up till now? So what if a person, Ashi is asking, or PIO coming to India and stays for more than 182 days and income is greater than 15 lakh. So in that very case, you are resident, and for ROR, you have to satisfy the 2 additional conditions because you are staying for more than 182 days. So you have to satisfy 2 additional conditions. Clear, Ashi? Anything else? Okay. So let's move ahead now. Now, as I said, we will be understanding what are the implications of these transactions. So up till now, as I said, category 3 and category 4 were considered as non-resident. Now they are usually considered as resident and not ordinary resident. So why this classification has been made? For resident, ordinary resident, ROR, RNOR and NR. So that is your section 5. Section 5, the scope of total income. Now section 5 is divided according to 3, which is ROR, RNOR and NR. So how will you classify it? Let's understand. So ROR, RNOR and NR. Clear? So first income category, income received or deemed to be received in India. This is taxable for ROR. This is also taxable for RNOR, and this is also taxable for NR. Clear? Is it clear? Then second category, income accruing or arising or deemed to accrue or arise in India. Clear? This is taxable for all the three. So accruing as well as deemed to accrue will be taxable for all the three. The third category of income, income accruing or arising outside India, this will be taxable for ROR. This will be not taxable for RNOR, and this will be not taxable even for NR. Fourth, income accruing or arising outside India from business controlled or profession set up in India. Now this will be taxable for ROR. This will be taxable for RNOR and not taxable for NR. Now you will ask me, ma'am, if we compare this RNOR category and NR category, right? So most of the things are same except one. If you see this income received is taxable for both. Income accrue or deemed to accrue is taxable for both. Income accruing outside India is not taxable for both. And only difference arises here. Right? So what is the difference which is arising? Income accruing or arising outside India from a business controlled or profession set up in India. This is taxable for RNOR, not taxable for NR. For ROR, remember one thing, the global income is taxable. For ROR, always the global income is taxable. For NR and RNOR, there is only one difference. Only one difference, which is at 0.4. Income from business controlled in India. Income derived from business control in India. So even though the business is carried on outside India, but if it is controlled from India, for RNOR, it will be taxable. For NR, it will not be taxable. Now understand one thing. Why this separate category of RNOR was created? Why this particular category was separately created? Why directly not a person is resident? So this category was created because when you become a resident in India, your tax rates change, right? First of all, then you need to file your return of income disclosing your global income, because for ROR, you have to disclose your global income. So even if you have earned the income outside India, you have to disclose all of that. Also in your return of income, you have to disclose your global assets for ROR. Now a person who is becoming resident for the first time in India, he would have certainly some amount of income and assets outside India because he was staying outside India for a while, right? He would have bank accounts, so he would be receiving interest income. He would have some other small incomes from deposits, whatever it is, or dividends from shares. So if a person who is first time becoming resident in India, if he is taxed on global income, if he has to declare global assets, it will cause hardship for him. So to avoid that, a breathing period of 2 years is given to this kind of person, right? A breathing period is given. That's why we have the additional condition, right? Resident in 2 out of 10 years, right? So a breathing period is given to RNOR so that he can, wind up his assets if he want to. It should not happen so that in the very first year he has the tax on global income. So because of that, what has been created is a separate category is created, which is just like a non-resident, but is not a non-resident. It is resident and not ordinary resident. So though the tax rates as those of resident will apply, but he will not have to declare his global income. That is why a separate category is created. So though the tax rates of resident will apply, the tax rates of non-resident will not apply to RNOR. But he will not have to declare his global income in the very first year. He is given some breathing period. Now understand one thing. Now why this category 2 and category 3 was created. First, I will talk about category 2. First is category 2, a person who has always been outside India, comes in India for 120 days or more, having total income greater than 15 lakh. Now, before this Finance Act 2020 amendment, he was non-resident. Now, he has been made a resident and not ordinary resident. So, what has changed? Why the government has changed this thing? Because there is no difference ideally if you see between non-resident and RNOR. So why the government introduced this amendment? Because as I said, these kind of individuals having income more than 15 lakhs, were trying to manage their stay, and even though they were controlling their businesses from India, they were managing their stay in such a way they were becoming non-resident, and hence their income in this fourth category was becoming not taxable. So business was carried on outside India, but it was managed from India or controlled from India. And since they were non-resident, they were not taxable on such business income. So this business income more than 15 lakh is considered something substantial by the government. So to tax that income from a business controlled in India, and those residents or those individuals who are managing their stay purposefully, they have been brought under this particular category. That is why 182 day has been reduced to 120 days for these kind of individuals. Understood? Very clear. So because there is a difference in this third category, this category 2 was introduced specifically for individuals who are trying to control their business from India but were managing their stay so that they were not present in India for more than 182 days. And they have been put under RNOR category. Clear? Third, for deemed resident, they are also put under RNOR category. Why that is so? Because you don't need to check any additional conditions from them, because the number of days of stay doesn't matter for them. So if they are RNOR, the tax rates as of resident will apply and not of non-resident. Understand one thing. So if their income is more than 15 lakh and they are not liable to tax in any country, they will be considered deemed resident, and their global income will not be taxable. Only the Indian sourced income will be taxable. And in that case, what will happen is the tax rate of resident will apply and not non-resident. Are you clear? So Pooja, you had asked me the doubt that whether for a person who is having income less than 15 lakh and not liable to tax in any country. So if he has less than 15 lakh income from Indian source, right, from Indian source, he would be considered as non-resident, because less than 15 lakh is not considered as substantial amount by government, but he will be taxed. Why he will be taxed? Because Indian sourced income is considered as taxable for RNOR also, for NR also. Only the tax rates will differ. Are you understanding? So income accruing or arising in India is considered as taxable for RNOR also, for NR also. But over 15 lakh, if he has the income, he will be considered as deemed resident and the tax rates of resident will apply. And if he has less than 15 lakh, he will not be considered as deemed resident and the tax rates of NR will apply. It was always taxable. Indian sourced income will be taxable even for resident or non-resident. The matter here is what tax rates will apply to that particular person. Is it clear? So the tax rates of resident will apply to category 2 and category 3. So that's why they have been brought into via amendment. Is it clear? Do you have any doubt till now? You can ask me any doubt. Nidhi have already provided. Take home, as I said, if a person goes outside India for employment, then it is 182 days limit. If a person who has always been outside comes on in India, then there is 182 day if it's less than total income is less than 15 lakh and 120 days if the total income is more than 15 lakh. Clear, take home? Any other doubt? So up till now, clear? Now understand exactly what is changing. Exactly what is changing from this amendment. So what all is changing? First of all, there is increase in total income because for RNOR, as I said, income from business controlled or profession set up in India is taxable. For NR, it was never taxable. So there has been increase in total income because now income from business controlled or profession setup is included for RN1. Clear? What will be the other implication? There are certain provisions specifically applicable for non-residents. We will see in this chapter. These provisions, which provide sometimes for beneficial tax rates, would not be available for RNOR. So therefore, specific concessions applicable to non-resident will not be available. Clear? Third, overall reduction will be happen if a person becomes RNOR under category 2 and category 3. Overall, he will have very limited years once he comes and finally settle down in India. Because even if person has not come ever to India under category 3, will be considered as RNOR. Say in future, he comes down to India, then the 2 out of 10-year limit will reduce for that person. So there will be overall reduction of RNOR status. Clear? He will have detailed ITR filing requirement and changed TDS requirement because for non-resident, different TDS provisions are applicable. He will have different tax rates. He will have different tax rates. Clear? So there are certain exemptions which are there for non-resident, which a person who will become RNOR will not be eligible to claim those kind of benefits which are applicable only for RNOR. Only one benefit which a RNOR will get and which NR does not get is higher slab rate for senior citizen, and certain deductions which are applicable for resident, that the resident, once a person becomes RNOR, will be eligible to get, which are not applicable for non-resident like ATTT. So all of that deductions will be available to RNOR, which are not available to NR. So that is beneficial for him. Even if a person is senior citizen, he has higher tax slab rate available to him, which is not available when a person is NR. So that will be beneficial for such a person who is becoming RNOR. Clear? Is it clear till now? So I'll give you the break. If you have any doubts, you can ask me, and then we will solve the sum based on it after the break. Any doubt? Chavi, for exception 2, it is not deemed RNOR, but it will be RNOR if it is more than 120 days and less than 182 days. So let's do one thing. I'll share with you the chart which I have so that you get an idea now before we take a break. Yes. So see, this is the chart which summarizes everything. So if an individual is the first question you need to ask is, has he stayed in India for less than 60 days in the relevant previous year? First thing, right? So if he has stayed in India for less than 60 days in the relevant previous year, then he will be a non-resident. If the answer is yes, he will be non-resident. If the answer is no, you need to check the second basic condition, which is, has he stayed in India for greater than equal to 182 days in the relevant previous year? Has he stayed in India for greater than equal to 182 days in the relevant previous year? If the answer is yes, he becomes resident. Then if the answer is no, then you need to check, has he left during the relevant previous year for employment or as a crew member of Indian ship? If the answer is yes, then he will become non-resident. If the answer is no, you need to check, is he a citizen or person of Indian origin visiting India during the relevant previous year? If the answer is yes, then is his total income other than income from foreign sources greater than rupees 15 lakh? If the answer is yes, then you need to say, is his stay in India during the relevant previous year greater than 120 days and stay in 4 previous year greater than equal to 365 days? If the answer is yes, he will be RNOR. If the answer is no, he will be NR. Clear? And if he is not a person of Indian origin, then you need to check the second condition. Has he stayed in India for greater than equal to 365 days? If the answer is no, then it will be non-resident. If the answer is yes, he will become resident. Clear? Then once he become resident, you need to check the two additional conditions. Has he stayed for more than for more than 730 days in the last years, and he has stayed in India, he has been resident in India for 2 out of 10 previous year? If the answer is yes, he will be ROR. If answer is no, then he will be RNOR. Clear up till now? Clear? Any doubt now? Neil, you are asking, if an individual has gone for higher studies to Europe and worked there for 2 years, as now we come back to India and doing a job and getting salary income, you will be considered as ROR if you fulfill the additional conditions. If you don't fulfill any of the additional conditions, you will be RNOR. Clear, Neil? Any doubt now? Clear? Then once he becomes resident, you need to check, has he stayed in India for greater than equal to 365 days? If the answer is yes, then you need to say, is his stay in India during the relevant previous year greater than 120 days and stay in 4 previous year greater than equal to 365 days? If the answer is yes, then he will be RNOR. If the answer is no, then you need to check the second basic condition, which is, has he stayed in India for greater than equal to 365 days? If the answer is yes, then he will be RNOR. If the answer is no, he will be NR. Clear? So I think you would be mostly RNOR because you have always been staying in India. Only for 2 years you had gone outside India. Pooja, I have already shared the PDF. I think you would get it. Now, what do you want me to explain? I'll take up the sum, which will clarify everything based on this, so that you will get a comprehensive idea, and I'll give you the sum to solve by yourself, and then we'll discuss the answers of that sum. Is it clear? Okay, let's take a break for 15 minutes and then we get back. Okay. So let's start with it again. There are some doubts asked. I'll first address those doubts. If an assessee is RNOR while filing the return, are there separate ITR forms? No, the ITR forms are same, Neil. Okay, Mridula, you're asking increase in total income. So what do I mean by that? So when I say what is the difference between NR and RNOR, right? So for RNOR, the total income increases because it also covers income from a business controlled or profession set up in India, which is not taxable for our NR. So that is the reason when I'm saying that amendment has been brought in by the government with this intention only, so that for RNOR we can tax that kind of income. So there has been increase in total income because of this amendment. So earlier, this income from business controlled and profession set up in India was not taxable for NR. But now since that NR has become RNOR because of this amendment, we have increase in total income. Clear, Mudrila? I have shared the PDF already. Uh, Vyashak, you're asking Indian citizen having income exceeding 15 lakh, we do not have to check the additional condition. We only need to check in the present year whether he is present in India for more than 120 days and less than 182 days. That's it. If that is the case, he will be RNOR. Clear, Vyashak? Any other doubt? Or I give you the sums and I want you to solve so that I know that you have properly understood these kind of things. Okay. So let me give you the sums. Okay. So the first sum, I'll give you 4 problems based on it. They are covering different scenarios. Mr. Akash is an Indian citizen. He has the following sources of income. Mr. Akash is an Indian citizen and he has the following sources of income. He has interest income from fixed deposits in Mumbai branch of Citibank, rupees 5 lakhs. He has earned rental income from property let out in Ahmedabad, rupees 8 lakhs. He had left India during the previous year, 2002 2003, for carrying on employment outside India. During the current year, he came on visit to India for 140 days. During the previous years, between 2002 to 2003 to 2019-20, his stay was as follows. I'm writing here the days of stay. You are required to compute the residential status. You are required to determine the residential status based on this. I'm giving you 5 minutes time. Please give me the answer in the chat boxes. Vyashak, I'll explain you what you're asking about business control. What are your answers? Give me the reasons also so that I know those who are sending me the answers. Please give me the reason also. Ravish, you are right. Muthu, why you are saying the answer? Please tell me that. Give me the reason. No, Lakshmi, the answer is but the reasoning is not correct. Please give me the reasoning also. Dhanush, the answer is again correct, but not the reasoning. Harish, you are right. Okay. So see, let's understand one thing. Here, Mr. Akash is an Indian citizen. Here, there is a lot of irrelevant information which I have provided in the question. Why that is so? Because I wanted to understand how you are applying this particular question, because it could be possible that in the exam same thing is given, right? So what you need to do is, here you need to see what is the first thing which is happening. This person has left India during 2002-3. So some of you have written in the answers that the 60 days condition is fulfilled, but the past 4 years 365 days condition is not fulfilled. So that is not the correct answer. Though your answer is correct, but the reasoning is incorrect. So you need to understand one thing. Here, the person has been now outside India for a while, since 2002-3, and he comes on visit to India every year. So in this case, what we will do is we will apply only the first category, which is 182-day condition. Here, 365-day condition doesn't matter. Here only the first condition matter, which is 182-day condition. And clearly, if you see, there is how many days? 140 days are given. So because of that, we need not even go and check the total income criteria. We need not even go and check what it was in the previous year's number of days of stay. What is becoming relevant here, that he has been outside India and he's coming on visit to India. So in that particular case, what will happen is his total income is less than 15 lakh, and therefore we will only apply 182-day criteria. That's it. If his total income would have been more than, if its total income would have been more than 15 lakh, in that case, what would have happened is we would have applied 120-day criteria. Are you clear with this? Any doubt till now? Or I can give you the next sum. Any doubt? Yes. Rohita, you are right. Perfect. Yes, Reba, you are right. Okay. Let me give you the next question then. Again, Mr. Akash, an Indian citizen, has gone for employment outside India during the current year in the month of June 2020. To be precise, I'll give you the date, say on 30th June 2020. Clear? He was seconded by his company with whom he was working in India to a US based company. Clear? The details of his sources of income are given here under. Salary received in India 20 lakhs. Salary outside India or salary for services rendered outside India 15 lakh. Interest on FDs in India 1 lakh. Dividend on shares of foreign company 50,000. He has gone outside India for the first time during current year. Determine his residential status. Again, I'm giving you time. Please tell me in your chat boxes what do you think is the answer. What will be the answer of this? Preeti, yes, the taxable income in the earlier question was 13 lakhs in India, but the criteria there was 182 days, not the 60 days, because he has been on visit to India, so he falls under exception 1. Gomati, please give your reason. Vyashak, please give me the reasons why you are giving this answer so that I know the reason. Vyashak, you are correct. Dhanush, right? Why, Jitender? Ravish, why you are saying this? Please give me the reasons also. Chavi, no. Neil, no, it's not the correct answer. Yes, Pooja, correct. No, Lakshmi, wrong answer. Harish, not a right answer. No, Divya Kumari. Gomati, yes, I got it, but what is your answer? Is he a resident or non-resident according to you? You are saying it's resident. No. No, Gomati, you're not correct. Lakshmi, no. Okay, let me discuss this now with you. So some students have given the right answers and majority of you have not given. So let's understand that why you have given incorrect answer. So the reason for that is some of the students have applied this particular, which is the second basic condition. Those who have given wrong answer, which is greater than 60 days in current year and 365 days in last 4 previous year. Right? You have applied this kind. But remember one thing, I told you there is exception to this 60-day condition. And what is that exception? If a citizen or person of Indian origin goes outside India for employment. Remember this. Then in that case, it will be only 182-day condition. R category 1 exception. In earlier sum, we have seen the incoming person. In this sum, we are seeing the outgoing person. So here 60-day criteria will not at all be applicable. Here only 120-day criteria will be applicable. So in that case, since he's present only for 91 days in India, he will be non-resident. Then the conditions do not matter at all. Some of you have looked into the income level and have appealed 120-day criteria, which is also incorrect. Though your answer might be correct, but the reasoning is incorrect. So what you need to look in for incoming person, you will look into the income limits. But for the outgoing person, you will not look into the income limits. Here, the exception rule apply and the 60-day criteria will not apply in this very case because he is going outside India for employment. Are you clear? Are you clear with this? Any doubt? So those who gave wrong answer. No, Muthu, it's not application of 120 days. It's application of 180 days. For citizen going outside India for employment, it is always 182-day condition. Only for citizen coming into India, having total income more than 15 lakh, only for that person, we have the 120-day criteria. Are you clear, Muthu? Ravish, you are right. No, resident doesn't come into picture at all. Deemed residency will come in when he is not liable to tax in any country. When he is not liable to tax in any country, only then deemed residency will come in. No, Ashmita, why deemed residency? Deemed residency will come in only when he is not liable to tax in any country. We deal with the example of that also. Those who gave the answer, he is ROR. Did you get it? Neil, it is not 60-day, it is 182-day limit. Preeti, you are again going into the 15 lakh limit, which is wrong. As I said, for a person who is going outside India for employment, in that very case, we do not need to see the income limit. We only need to apply 182-day criteria. Clear, everybody? Is it clear? Did you realize what mistake you made? So see, this is the chart which I explained you initially. A person going outside for a member of crew of Indian ship, 182-day criteria. Replace 60-day with 182-day. You do not need to see the total income. Indian citizen or person of Indian origin coming to India having total income less than 15 lakh, you need to see 182-day criteria. So when incoming person is there, you have to remember, you have to check income limit. When a person is going outside India, you don't need to check the income limit. Clear? If Indian citizen or PIO coming into India having total income more than 15 lakh, 120-day limit. If Indian citizen is not liable to tax in any country, then in that case, if his income is greater than 15 lakh, irrespective of number of days of stay, he will be deemed resident. Are you clear now? Are you clear? No, Dipti. As I said, he is a non-resident because his stay is less than 180 days. You don't need to apply 120-day criteria. Clear? Let's solve two more sums based on this. One would be on deemed residency. Okay. Now? Okay. Okay. Let's solve one more sum. Mr. Roy, an Indian citizen, has following sources of income. Consultancy income from Indian client, rupees 13 lakh. Consultancy income from business in Germany controlled in India. Interest income on bank deposits in UAE, rupees 1 lakh. Rental income from house let out in New York, rupees 5 lakh. Dividend income from shares of Reliance Industry Limited, 1 lakh. Salary in UAE, 20 lakhs. He has stayed in India for 130 days during the current year. He left India during the previous year, 2012-13, with his family to settle in UAE. His stay in previous year is as follows: 12-13, 190; 13-14, 150. determine his residential status, and what will be his taxable income in India? I need two answers from you. Neil, you're asking an individual who is not a citizen of India is not taxable in India at all. It's not that a person who is not a citizen of India can be taxable in India if he is resident in India based on either the fulfillment of any of the two basic conditions. But he will not fall in the exception list, the exceptions which I have given you. He will not get into the exception list. He can be resident if he crosses 182-day threshold, right? But he will not get the exception of 120, 182-day like that. So if he fulfills either 182-day condition or 60 days and 365 days, he become resident. Yeah, yeah, yeah. So what is the answer for this? What answers you have got? Dhanush, you are correct. Pooja, we are not looking at year 12, 13. And the answer is not correct, Pooja. No, Pooja. How, Gomathi? Can you give me the reason for this? No, Chavi. Lakshmi, your answer is partly correct. No, Rohita, wrong answer. Ravi, no. Divya, you are right. Yes, perfect, Harish. No, Neil. You are asking for Neil this question, or you're generally asking the doubt? No, Komathi. Neil, can you tell me what you're asking exactly? Is it related to this question, or what is it? So that accordingly I can answer. Yes, Preeti, perfect. No, Vishak, your reasoning is not correct. Lakshmi, right? Perfect, Pooja. But the amount which you're telling me is not correct. Your reasoning is right. Okay. So let's discuss this question. Muthu, you are saying no. Your answer is not correct, Muthu. Okay. So let's discuss this. See, here we are talking about a person who has been always outside India since 2012, right? So in this case, he will be an incoming person, right? And here I need to check the total income limit, right? Now, what is the total income? Income which is other than income from foreign sources, right? So in this particular case, Which are the total income which we have to consider? First, consultancy income from Indian client. Consultancy income from Indian client is an Indian sourced income, right? So that will be considered. One second. Yeah. So that will be considered, right? Consultancy income from business in Germany controlled in India. Now, most of you eliminated this 2 lakh. But I had told you the income from foreign sources is defined under section 6. It says income which is accruing or arising outside India, income which is not deemed to accrue or arise in India, but it will include income from a business controlled or profession set up in India. Right? Remember? So this will also get included. Right? This will also get included. So this makes to 15 lakh. And then whether interest income from bank deposits in UAE, this is accruing or arising outside India. So this will not be included, right? Rental income from house let out in New York, again, this will be not included, accruing outside India. Dividend income from shares of RIL, yes, included. So this makes it to 16 lakh. So 13 plus 2 plus 1. So we have 16 lakh as total income in India, which is greater than 15 lakh. Salary in UAE will not be included. Correct? So once the total income is more than 15 lakh, I fall into category 3, which is what? 120 days will be considered. 60 days will be replaced with 120 days. Correct? So in this particular case, 120 days, if he is present in the current year for more than 120 days, the answer is yes. Plus 365 days in last 4 previous years. Right? So in the last 4 previous years, how many days he has been present? He has been present for in 1920 for 5 days, in 1819 for 10 days, in 1718 he has not been present, and in 1617 for 130 days. So he has been present only for 145 days in last 4 previous year, right? So he is not satisfying this condition. So he has been present in the current year for more than 120 days, right? But he has not been present for 365 days in the last 4 previous year, and therefore he becomes a non-resident. Clear? Therefore he becomes a non-resident. Say for example, in this 1718, if I would have considered 220 days, right? Then in that case, what would have happened? He would have become resident. Because in the last 4 previous years, he would have been present for more than 365 days. But since he is not present, he becomes a non-resident. If he would become have resident, because he would have satisfied both the conditions under the basic condition, he would have been RNOR. Are you clear? Are you clear? Right? But now he is non-resident. So we need not check any requirement. Are you clear with this? Are you clear? Any doubts? Any doubts? Ashmita, yes. Chavi, dividend from Indian company is not exempted now. It was exempted until 2019. From 2020, it will be taxable from this particular year. From financial year 2020-21, dividend is taxable in the hands of shareholder. There is an amendment. So those who said R and OR were not correct. Had it been 220 days in 1718, he would have been R and OR. But in this case, he would be NR because he is not satisfying the 365-day condition. We only need not check 120 day. We need to check 120 plus 365 in the past 4 previous year. Are you clear with this? Any doubts you have? So those who said for 182, those were also not correct because it is 120-day year it will be considered. Are you clear? Pooja, I have not included, okay, I have included only income from Germany from business controlled in India because for the total income purpose, right? What section 6 says is it doesn't classify into residential status for this. Section 6 clearly says what is not income from foreign sources. It says income which is accrued or arising outside India other than from business controlled in India. So for computing the total income year, we will have to take into consideration 2 lakhs also. Understood? Though for the taxability purpose, only 14 lakh is taxable. But for the determination of this particular provision, whether he is which particular criteria will apply, we will have to consider 2 lakh also. Clear, Pooja? Did you get it, Pooja? Are you clear? Neil, you want me to explain again? So I'll revise for you again. Understand one thing. See, first we have to see the basic condition. Right? What are the two basic conditions? 182-day and 60-day plus 365-day. Right? This is for any person. For any person, right? So if these conditions are satisfied, he will be resident. Then we have to check the additional condition. What are the additional condition? A resident in 2 out of 10 previous year plus greater than equal to 730 days in 7 previous year. Right? And then only he will become ROR. There is no income condition. Clear? Second, for Indian citizen or person of Indian origin going for employment outside India. Right? It is only 182-day condition. Clear? Additional condition 2 out of 10 previous year plus 730 days in 7 previous year. There is no income condition. Third, for Indian citizen or PIO going as crew of Indian ship. Same. Same as second condition. Fourth, for Indian citizen or person of Indian origin coming on visit to India was always outside India, right? Since long time. What is the condition? 182 day. Additional condition same. 2 out of 10 previous year he should be resident and greater than equal to 730 days in 7 previous year. Here there is an income condition also. Income should be less than 15 lakh. Clear? Fifth, for Indian citizen or person of Indian origin coming on visit to India was outside India for long time, 120-day condition, right? No additional condition, but stay in current year less than 182 day. Income greater than 15 lakh. And the last one, for Indian citizen not liable to tax in any country by his residency, no days limit. No days limit. Even if not came to India once. No additional condition greater than 15 lakh. This case will be deemed resident. Are you clear now? So we have divided this into 6 cases. If you see. Clear? I'll give you one more example to solve. But are you clear up till now? Neil, did you get it? Concept very clear? Taxable income Venkatation was 14. Rohita, what you are saying, total income other than foreign sources exceeded 15 lakh and his stay greater than 120 days but less than 182 days. So why can't we consider RNOR? It is RNOR, Rohita. It is RNOR. So this is RNOR. This is RNOR, Rohita. Neil, I'll explain what all is included in 15 lakh. So in 15 lakh, you have to include income. One second, I'll draw for you. For the purpose of $15 lakh, what all you will include and what you will exclude? Income received in India, income accruing in India, income deemed to accrue or arise in India, income from business controlled or profession set up in India. And what you will exclude? Income received or accruing, received and accruing outside India. Clear? So what you will exclude is income received and accruing outside India. Rest, what is received in India, accrued in India, deemed to accrue in India, but income from a business carried on outside India but controlled from India will also be included. So income from business carried on outside India but controlled or profession set up in India would be included. Clear? Now is it clear, Neil? Any doubt, anybody? Shall we do one more question? Let's solve one more question. Mr. John is an Indian citizen born and brought up in New York. He has been engaged in providing software consultancy services. He visits India very less number of times or very rarely. In the current year, he has not visited India at any point of time. However, he has certain sources of income in India. During the current year, he took citizenship of Cyprus where he did not pay any taxes. Also in USA, he had not paid any taxes. He earned rupees 10 lakh from rental income in India. He also had some fixed deposits on which he earned interest of rupees 2 lakhs and dividend of rupees 5 lakh from shares of Indian company. He earned income from consultancy in Cyprus of rupees 50 lakhs. Determine his residential status and total income. Give me the answer. Nil, income from foreign assets would not be included. What is the answer for this? Yes, Pooja. Yes, Preeti, you are correct. In the last example, I said it like that. Perfect, Gomati. Yes, Mridula. Right, Ravi. Jitendra, you are right. Vanchika is not ROR. No, Dhanush. It's crossing 15 lakh, Dhanush. Yes, Ravish. Lakshmi, you are right. Veshak, yes. Neha, yes. Yes. So here, if you see, he will be deemed resident because he is not liable to tax in any country. What he is deriving is 2 lakh, 5 lakh and 10 lakh. These all would be included in total income. Total 17 lakh. He would be considered directly RNOR. No need to check additional condition. Clear? Is it clear? Now, I think somebody has asked me, what is income from a business controlled in India? So what is controlled in India? Say, for example, you are carrying out business in Germany, but you are managing it from India, right? Or say, for example, you have some partner who is trying to manage it from India, though you may not be directly managing it, but it is being controlled from India. In that particular case, if that business is being controlled from India, the operations are being directed from India, though it is carried on outside India, in that particular case, it will be considered as income controlled, income derived from business controlled from India. Clear? Any doubts? Yes, Lakshmi is right. Rohita, you are right. Harish, right. Have you understood this concept very well? No, Dhanush, FD is in India. I hope the concept is very well registered. What I'll do is I'll also share this notes what we have written so that you can revise it before the next class. No, Divya Kumari, total income is not 67 lakh because only the Indian sourced income is taxable in the hands of RNOR. Clear, Divya Kumari? Is the concept clear with everyone? Or do you want me to revise one more time? Thanks, Mridula. Before we wind up, do you want me to revise one more time? Or is it clear we can revise it in the next class as well? I'll share you the notes. Yes, Nidhi, correct. But in the exam, you also need to write not only deemed resident, but you have to write he is deemed resident as per section 61A and he is resident and not ordinary resident. We don't need to check additional conditions. Yes, Pooja, it should suffice, but it's not full DT which I'm covering. I'm covering only non-resident taxation part. I'll ask to share again the PDF and this particular notes also for revision, Jitender. Thanks, Ravi. Thank you, Neil. Thanks, Komati. Vyashak, what you are asking is that in case of deemed resident not liable to tax, even cover the exemption? No, that's not correct. So if you have income in the other country, say for example, you have dividend in other country, but that country grants you exemption from dividend like it was there in India till now. So in that case, that will be considered as liable to tax. Exemption does not mean it is not liable to tax. So that is something which is out of the coverage of this particular DT portion. It might be covered in paper 6C, but here the meaning of liable to tax is not really covered in this particular part because it's something related to international tax portion, right? That is not coming out of the act, but that is through interpretation of case laws. But understand one thing, that not liable to tax means you are not liable to tax because of residency, that you are not resident of any country. It does not mean that you are getting exemption and hence you are not liable to tax. It's not that the case. Thank you, Pooja. Thanks, Anush. Thanks, Harish. Yes, Shalini, right? So shall we wind up the session? and I'll see you in the next class on 3rd, I guess. Yes. Okay. So thank you very much. See you in the next class, and I'll send you the notes for revision.